Okay, welcome back to the channel. I'm going to try and make this as simple as possible, how I invest. So pretty much CXO, this company here, why did it go from here to here? Because lithium, first of all, electric vehicles coming out, we need so many electric vehicles, and they all need lithium. Lithium was never around before, it's just, we need it now, so guess what, no one was making it. So if you could get out of the ground, you could sell it for a lot of money. But we didn't know that was going to happen until they went to shortfall. And it's like, oh wow, something goes into shortfall in this huge demand, the price goes from 5x. So they used to think they could sell it for this much. It's now selling for, like, so Core Lithium was thinking like, oh, we'll sell it for 800. It's now selling for $5,500. This company, Pilgrim Minerals, why they've gone like this as well is because lithium demand, and they can sell a lot of tons, a lot of profit. So this is per quarter, and they're going to do 1 million tons. So if you do 1 million times 5,000, what is that, $5 billion a year? Then you got all taxes and everything. But yeah, take in mind, if you saw lithium back in the future, you could have bought this one and hold. You would have like gone up, lost money there. You would have lost, like, you put 10,000 down here, you'd be like a lot of money. See heaps of money going up and down. So yeah, just saying that. Where are we? Yeah, so they're gonna make more money, and guess what? With that, all that money they're making, they can better themselves than the rest. So the rest are gonna have to play catch up. So they're building the solar plant, so it gets the price down for production. And they can buy other things. They can go downstream. So here they are going more tons per year. Because guess what? They spend $200 million, then they make that back in 1 year and make it for 20 years to come. That's why they doing that. Then they're going downstream, so you get 8 tons out of the ground, process it, it makes 1 ton of lithium hydroxide, which goes into the battery, if you didn't know. So they're going downstream as well, then they're going like half downstream with this halfway thing. So basically comes out of the ground, makes the lithium salt, and then they do something with that to get lithium hydroxide, something like that. So that's lithium, I didn't say. So lithium's already gone. Like, I'm not buying lithium now, it's huge. If there's some glut in lithium, these companies will just fall off the cliff. Like, there's some scare, even though they'll come back eventually, because we're going to need a lot of lithium. Say they hit a bit of a murmur, oh, we're only getting 2,000 this year, it's going to fall off a cliff and then probably come back. But when it falls off a cliff, if you know it's going to come back, that's when you buy low, sell high. Anyway, that's lithium. So lithium's already going up in price, and I see the next one being natural graphite, because we need natural graphite in the batteries as well, lots of it. But guess what, we have got plenty of natural graphite. I think this company can meet all the demand for natural graphite now, plus China's doing it all because they've been doing it for years. Come 2025, if we get to that many electric vehicles, we're going to go in a shortfall of graphite, and we're going to need a lot more so people can charge a high price, which means instead of getting it out of the ground for 500, selling for 800, they'll get out of the ground for 500 and sell it for 3,000, meaning this price will go like crazy. Meaning this company here, who's actually 70 million, you buy them, pay $10 million more, have the mine finished, and then make 50 million per year, pay tax and all your costs, and then get $25 million in the hand. And guess what? That 25 million, then you can reinvest it. Only 70 million. But take in mind, they say they're going to make that much, but the demand for graphite, I don't think is quite there yet. They could make half that. They make 10 million. Then we hit the shortfall, they make a lot more. So this could be like buying CXO before. This could be like buying CXO. Where is that? Down here. Before they knew they were getting into. Before the lithium price went up. When they were just drilling on their way to getting into production. Could be wrong, but that could be WKT. And ITM as well, if I can find them. Wait one sec. So if I didn't already say, CapEx is important. These guys had to spend 89 million to do this many tons. GL1, I think this is because different, maybe inflation as well, is spending $400 million to do a bit more tons than this, but it's spending like way more because they're out in the middle of nowhere, where these guys are near a capital city. So if you're near a capital city with existing infrastructure, electricity, roads and all that, you're way ahead of the competition. You don't have to raise 400 million, you just have to raise 100 million. and therefore you're not diluting the share price, which is why global lithium will probably trade sideways with share price. The market cap will go up, but the share price will probably won't go up as much, given the person has to give them that $500 million to build a mine wants a big share of the pie. So yeah, that's just my opinion. So anyway, ITM only around 30 million, something like that. Got a big resource they got to drill out. Got to wait for the demand for graphite, but once that kicks in, I do see this worth a lot more. And 35 million. So basically, rough figures. I know the rough figures because the company down the road, RNU, has done the figures, which is spend $200 million and make that per year. And that's before taking into mind the graphite shortfall prices, which could be double. So these guys could spend 200 million and then make that per year for many years to come with natural graphite. And by the time they're making $200 million a year, they're going to be a lot more than 35 million. So this is sort of my idea of buy low, sell high. Buy before there's a shortfall in demand and the graphite price goes up, and also buy low before this company has drilled it out. You sort of know they're going to drill it out and be able to get into the batteries with a huge resource. If you look at their website, fair chance they will. And yes, it's buy low. You're buying before the graphite shortfall, which may not happen. I could be totally wrong, and you're buying before they release the results, before they get an offtake agreement which shoots up the price, all that. Before they confirm metallurgy. They've confirmed metallurgy, which means that they can get into the battery on the small project. And then this other project's only 10 kilometers away, so they just got to work out how to get into the battery from there. Doing the different processes, which I'm sure they're going to do. If it's only 10 kilometers away from the other place, I'm sure they'll work it out. If the other neighbor can do it as well. So that's not confirmed, but when that gets confirmed, up goes that price. Oh, look, graphite shortfall, people going to EVs. Tesla makes really cheap EV and everyone's buying it. Up goes graphite. Just my opinion, could be wrong, but that's where I'm investing my money. Natural graphite. Before there's a shortfall, I predict the shortfall. You make money being right on the predictions. So I predict ITM, and I predict WKT, and probably VRC as well. Take mine, you have to research these companies. I just sort of know them inside out. From research, these guys got a big mine. They can spend $200 million. They spend $100 million and they make a bit, and then when they want to raise the rest and meet more demand with natural graphite, they can spend more and make $200 million a year for 20 years because they got so much graphite in the ground. Then that's in Africa, and then they have this one in Ukraine, which is out from the war, which is why the share price is probably going down quite a bit. But then maybe Ukraine turns around and they can just spend a little bit of money to get that in production and sell graphite, because people are buying petrol every day because they have to. But when electric vehicles get cheaper than petrol cars, then people are going to be buying graphite. But instead of buying it bit by bit, you'll buy a lot at the start for your electric vehicle, and then you won't have to buy it anymore. So that's it from me. So natural graphite is my prediction. Tell me yours. Pretty much anything. You can make money in anything. You just have to buy low, know what you're holding, and sell high. You can even sell like moderate high, and then rinse and repeat. You don't want to buy after an announcement, or buy a company that's $300 million and has to raise $600 million. Yeah, you don't. You just got to do the rough figures. Think, well, is that good? They're going to make $50 a year and I spend $10. Well, yeah, roughly that is good. And is it likely to happen? Yeah, it's more than likely than unlikely. So yeah, so I'll take a pent on this stock. And sometimes you're wrong, sometimes right. But sometimes you're right, and that makes it 5x. Sometimes you're wrong, you go down 50%. But if you didn't sell, if you knew it was still cheap, the price you bought it went down 50%, you can still hold and will go back up. Could go back up, could be wrong. But you just got to be wrong more times. Sorry, you got to be right more times than you're wrong. And if you do research, you probably will be. Anyway, that's it from me. Tell me your thoughts. I know some of you like uranium, don't know much about it. But yeah, any sector, if you do the rough figures, you know it inside out, you can tell me what's what, then that's when you're probably ready to invest and you're ready to make money. Otherwise, if If you don't know what they got on the ground, how much money they can make each year after spending what amount of money, you will lose money. That's my opinion. So see you later. See you in the next video. Thanks for watching.